So, hello everyone. Today's is a very exciting session of this concept session 7 of level 1. So, this session I can tell you that we are going to discuss about the key spices. Okay, so suppose we are going to cook some recipe and there the key ingredients is the main ingredient. For example, matar paneer. So, the paneer is the key ingredients, the cottage cheese and the green peas. The fresh one is the better one, and plus many other things. And the spices plays a very crucial role. And after that, the way we are going to cook. So related to this is stock market, whatever we are going to learn today, that is the technical indicators. The today's topic, I can give you an analogy. It is equivalent to the spices what we are going to use in our cooking. Okay, so without this it will be very challenging to cook a very tasty one. So far we can say we I mean we can still use it, but the maybe the outcome will be kind of a plain khichdi, not so much exciting. So today we are going to learn about the spices of the technical analysis, and that is spices is the technical indicators, and they are MACD, oscillators, and divergence. So hope you are also as excited as me. So let us start. So yes, so what are the technical indicators? So these are the tools, okay, and which are calculated based on the historical price and the volume, and used to speculate future price movement. And speculating future price movement is the ultimate goal of learning the technical analysis. All right. And again, they are plotted. So far we were just looking at the plain charts. Okay, now we are going to add the technical indicators on top of the chart. Okay, so I mean, along with the chart, I can say, we'll show you in a few minutes. And what they are going to do, they are going to act as a supporting tool for the analysis. So like in our dishes, the spices are going to enhance the flavor of the dishes. So similarly, these technical indicators are going to support our technical analysis. That means that they are going to provide the additional conviction about our future speculation about the price movement. And okay, these are the indicators that we are going to talk about. MACD, it is a moving average convergence divergence. And the oscillators, among oscillators, we have stochastic and relative strength index. So RSI in short, and MACD in short for moving average convergence divergence. Okay. So don't worry. I mean, you again don't need to by heart each and everything. As we learn, proceed further, automatically once we get used to of that, it will be in your practice. Okay, so if you are hearing these names first time, I think some of you might have already aware of, but any one of you hearing this first time, no need to worry about. These are the very simple to use. Or I can say that I will make it very easy for you how to use them. Okay. So let us first start with MACD. So MACD, the full form is moving average convergence divergence, is a trading indicator that is used for our technical analysis. At the same time, it is also called as a trend indicator. What it means that depending on this particular indicator, we are going to tell or going to conclude that the trend of that particular stock or script is uptrend, downtrend, or maybe the sideways. Okay, so chart is the one that we used to see. However, this indicator is the another term which will add better conviction about identifying the trend. So this, what is MACD? So this particular MACD as the indicator, the complete indicator name is MACD. Within that MACD, there are three parts. So first part is called MACD line. So MACD line, if you look at this at the bottom of the slide, there is a simple wave diagram. It is sinusoidal wave, but not the fixed one. Okay, so this is the somewhat of a snapshot of MACD indicator. We will going to see in the real chart as well, but this is the snapshot just for the understanding purpose. So it has the three parts. So if you look at here, it has the one blue line and then the red line, which are keep on moving up and down in a sinusoidal wave. And the third one is, if you look at, there are the vertical lines. Okay, these are vertical bars. And again, and one more thing is that you have a one horizontal, I can say, pseudo line, which is there is no line, but that is the pseudo line, and that is acting as a median, I can say. And above or below that pseudo line, this blue and red line keep on fluctuating up and down, and this red vertical lines formation is also happening. Okay, so that was a quick introduction about MACD. So what are the three component of MACD as an indicator? So MACD indicator has a MACD line, which is nothing but this blue line. And the second line is called a signal line, which is represented as a red line in this indicator. And the vertical lines or vertical bars it is called as a histogram. Okay, histogram is the vertical lines. And how to read this or how to use this one is when the MACD lines crosses the signal line. Signal line means that is the red line. So for example, if you look at this bottom point, so where the MACD line, that is the blue line, is crossing signal line in upward direction. So that is the treated as a trigger for a buy signal. I mean, that is treated as a signal for buying. So if you are maybe a investor or maybe in a short-term positional trader or even a day trader, so depending on whatever the time frame that you have selected, if you find such kind of formation is happening in your MACD indicator, it will be treated as a potential buy signal. So why I'm saying potential buy signal is that these are the individual ingredients we are learning, and then we are going to apply maybe more than one ingredient altogether to cook our best of the cuisines. Okay, so maybe combination of two indicators plus the chart plus the candles. So all those combination will be using that will be we will be covering in the application sessions. As of now, that's and focus on this particular indicator. So okay, so when MACD line is crossing the signal line in upward direction, that it will be a potential buying signal. At the same time, when this MACD line, that is a blue line, is crossing down the signal line. So if you look at here, so MACD line, this is a blue line, which is crossing down the red side sign, that is red line, that is a signal line, and that will be considered as the trigger for a sell signal. Okay, and the histogram are these vertical lines or the bars, which shows the basically the distance between MACD line and the signal line. So at any point of time, whatever is the gap means it should be we are treating here as a perpendicular gap, not the horizontal or any gap any particular angle. Is the gap is the perpendicular gap. Okay, so if you look at here, there is a no bar, because if you draw at this point of time, this MACD line and signal lines are all is coinciding to each other. So that's the reason there is no histogram printed here. So that is the very brief about MACD line. A little bit technical information. So MACD line is, again, it is not the I can say this is not the primary indicator. Basically, this indicator is calculated by using the EMA, which we have already learned. So MA, moving average, was the one indicator that we started with. The very simple average of the some particular period of price chart or the price point, and then we learn about the EMA, that is the exponential moving average. So this particular uh, indicator is calculated out of EMA. Okay, so if you look at here, so basically the when we are calculating about the blue line or how the blue line is getting formed here, so they are calculating the 26th EMA, subtracting the 26 EMA value from 12 period of EMA value. Okay, so these are the additional information I'm sharing. In reality, you don't need to know about these calculation. Okay. Question from Avdesh is there is no relation between volume and these bars. No, Avdesh. For these bars, histogram bars, there is no relation of volume. Volume is altogether separate indicator, which we already touched upon how to use them. However, when we learn about the application, we are going to cover the volume part in deep. But to answer the question in short, these vertical lines or red bars has no any relation with the volume. Hope I'm able to answer the question. Sure, you're welcome. Okay, so blue line, as I said, 26 period EMA minus 12 period of EMA. So that is used to calculate and print the blue line. And the red line, that is a signal line, is a simple the 9 period EMA of MACD line. Okay, so whenever the MACD line, once you calculate, it is just taking the 9 previous period of MACD line, that is printing the signal line. Okay, and histogram we have already learned. So this is just additional information. I mean, some point of time, I mean, many of you are engineers, so you wanted to know that, okay, how these are getting calculated. When in reality, to use them, you don't need to know that. Okay, it's like a cardamom or clove. You just use it for a cooking. How they are grown, where they are, generated or produced. In reality, you don't need to know. Okay, you just need to know that how much quantity we need to put it in some particular dishes. Okay, let's move further. So this is the one typical example of MACD in the real chart. So in this one, in this example, this is a snapshot of ICICI Bank on the uh, daily period selection, or the daily time frame selection, we can say, right? So maybe what I can do, I can directly show you in the chart, but I just understand this one. So once we add this MACD, indicator, so I think it's basic. It will be better to look into the chart itself. That will be more much better way to learn. So let me bring the ICIC script or ICIC chart. Not Prudential, I need ICIC Bank. Okay. Okay, so how to add this particular indicator in your chart? So when we search about any stock, we'll type the name, it will print, and from there we can select. I'm just typing for you. I just selected ICICI Bank, and normally we look into the NSE. So the first point, ICICI Bank Limited and stock NSE, that is my chart selection. Once I do that, it will show me the ICICI Bank chart. To add the indicator, what I need to do, the same to the indicator um, drop down list or the option. I just pop and launch that one, and I will simply type MACD. Okay, and MACD will be displayed here. I'll just click, select that one. So there are a few more. I don't need them now. I will just have the only MACD at this point of time because we are going to learn about MACD. Okay, so my MACD indicator has been added into my, in addition to my chart. So, okay, and how we can also toggle them if we just click, do the double click on the upper section. Okay, anywhere in the upper section, any free spaces or free places, it will simply display the chart in the full screen. And once again, if you do the double click, the MACD selection, MACD section will be also displayed at the bottom. Depending on your personal choice, if you look at this particular where I'm holding my mouse, the uh, rightmost side on the upper corner of the MACD area. So there are some arrow. So if you want, you can toggle it up also. So MACD will display on the top and the chart at the bottom. So I personally prefer to display any indicator at the bottom. However, it is up to you that okay, where you wanted to display your indicators. Okay. So so how to use them, as we were discussing in the theory, that so whenever any, okay, look at this particular, the complete chart. Okay, right. Let me bring, so this is the largely the I can say detailed history of the ICICI Bank. And mostly if you see, it is keep on, trend is always or mostly in a upward direction. That is the outperformer. And in between, there are some dips also. And we learned so far is no matter whatever is the stock will be, it is not going to move up in a linear direction. There will be some rest or some correction in between. So correction, I think that this word I'm using first time with you. So correction means any point of time when the stock prices are coming down, it is okay, it is not going to go further. It for some period of time, it will, the price will drop. And that particular phase is called the correction phase. Okay. So overall, it is the upward direction in a longer run, if you see. And coming back to this MACD part, so suppose, I mean, whenever you need to take any trade, you are not taking the trade into the past. Past data will tell you that okay, what is the previous performance, support and resistance. But what is happening right now? Okay, if someone need to take a trade based on that, so first, I mean, whatever that we are having, we are discussing right now, or the learning we are having, so we need to apply them into the previous, past data just to make our learning stronger. Okay, so that's the reason we keep on looking at the historical data and how to apply these learning into the historical data. So that means if it worked in the past, largely it is going to work in future as well. Okay, so if you look at this particular area, okay, which I'm highlighting here. Okay, so there is a crossover, or the crossover is happening, or you can simple term we can say that the green line is a signal line we just learned. It is crossing over the red line. Okay, and that could be treated as a potential buy signal. Okay, at this lower level. Okay, so wherever there is a this particular crossover is happening, that means the entry point. And just to highlight one, what could be that point? So there is a vertical line here. We can just keep it at the crossover point, just to understand that okay, what should be the equivalent price. But otherwise, once you hover your mouse, there are gray dashed or dotted line that is going to tell you the corresponding candle. So this is the daily chart selection. And if otherwise, if you wanted to highlight via vertical lines, you can also do that. So at this price point, and whenever, I mean, you are using this particular indicator for your, entry point of view. So maybe you can You need to identify what is the corresponding candle, and once you identify it, you don't need these additional vertical lines. So basically, once you identify, and then it is once you decide, and then you can plan for taking an entry here. If you look at here, so apart from this technical indicator like MACD, there is something else also you can see. Can anybody tell me what you can see here? We have learned in our, yes, fantastic. Absolutely right of this. So this is the morning star, and which is the sign of which kind of candle? So this is the bullish candlestick pattern, three candle formation. That is the bullish one. Absolutely correct of this. So here we got a two conviction. Okay, that is the MACD crossover, positive side, the bullish morning star candlestick patterns. Okay, if needed, we can have an indicator. Just now you were asking about the volume part. We can add the volume here, and the volume will be also displayed, right? So if you combine these three together and consider as a bullish candle, and if you look at the all the three candles, individual candles also, if you look at, the volume is the higher than the average volume. So I mean, based on combining our learning and three different concepts. One is the candlestick pattern. The second one is MACD as a technical indicator, and the third conviction is the volume. And such in a such scenario, we can think about taking the trade confidently. Okay. So again, coming back to the MACD. Okay. So this is the entry point, that is the buy signal. What about the sell signal? Okay. So as we learn sell signal, I mean, we can also, you know, try, we can also take an exit here also. Okay. These are the few places where the negative or downward crossover is happening, where the blue line, that is MACD line, is pointing down or crossing down to the signal line. So if you have taken the entry at this level, potentially you can decide to, exit out of the trade based on the learning so far. Okay, I'm not saying that okay, this will be the ideal place to get exit. But based on the learning so far, as per the level one, you can, decide to exit from your trade. Okay. Otherwise, some ideal conditions are okay here. And there are a few more indicators we are going to learn in next couple of minutes. And based on that, we have a better edge to maximize our profits and have a better exit point. But as of now, just focus on the MACD, and we will learn additional things in subsequent slides. So if you look at this particular candle or this particular scenario, where the again negative crossover or MACD line is crossing down the signal line, and that could be treated as a another potential signal for exit or sell. So when I'm saying exit, that means you have already, I'm assuming someone is already into the trade and they are planning to exit their position. That means if they have they have purchased those stock, they can consider selling at this point of time. Or additional one is, if somebody wanted to do the short selling, we can also decide about short selling. Okay. And right. So this is all about the MACD, and whatever we have just saw, that's example of ICICI Bank. Okay, and there was similar one more example of Axis Bank, right? So if you look at this first point, this is the positive crossover or blue line is crossing over the red line, that means the potential buy signal. And whenever it is crossing down the blue line crossing down the red line, it is a potential sell signal. And there are two other more examples on this MACD. Okay, so this is a simple yet very effective indicators that is called MACD. If anyone has any question on this MACD, please feel free to ask. Okay, one more additional information I would like to share here. So if you look at the distance of this MACD from this horizontal or the pseudo x-axis, so the higher is the distance from this pseudo x-axis to this MACD line or signal line, it will be considered as the strong move. Okay, strong move. If it is upside, then it is a strong move in upward direction. And if that is the downside, I mean below to this horizontal pseudo line, that will be the strong in terms of moving down. That is the falling situation. And if any point of time this MACD line and signal line is very near to this horizontal line, so it will be mostly considered as the as closer it is moving, so it will be treated as a more of the signal, sorry, more of this sideways. So it is market is not going to up or down, it is mostly moving into the sideways direction. So that is the another representation of MACD. So like sometime we need to identify that, okay, this market is moving up or down. But if you observe that it is just moving up and down very closer to the this horizontal bar. Maybe I'll show you a quick example. Let me find out one such example for you. Any stock, can anybody suggest? I can take the example from there based on your suggested stock. Okay, meanwhile, another question, can we take decision only based on MACD? No, of this, it is not recommended. Okay, so I mean, as many as number of indicators or or the instrument that we can use, that is better. And few more we are going to learn today. So suggestions is from okay, let's take a SBI. Okay, so this is the SBI I have selected. It is a daily time frame. Let us look at somewhere it is the MACD line. Maybe I'll just reduce the maybe time frame. Let's say some other time frame, maybe hourly or so. Okay. Yeah, let's take even a recent example. So if you look at this SBI chart, the recent example. So if you look at the past, this MACD line and signal line is quite far away from this horizontal, line of the MACD indicator. So here it is maybe the distance I just wanted to show from this side. So this is the kind of an average distance. Okay. However, if you look at the recent one as of now, so the distance is just very small, very, narrow distance, I can say. So what is this representation based on the MACD indicator? We can say that so far this market is more of the sideways, because the distance of MACD and the signal line from this horizontal axis, it is not much. It is coming very closer as compared to the historical data. If you look at the history, that these are MACD lines, signal lines are quite far away. Right. Okay, is there any other question on this MACD indicator? Otherwise, we'll move to the next one. Okay, let's look at the and the so next indicator is called the oscillators. So oscillators are again two additional technical indicators which tells us or which help us to identifying the turning points. The turning, what it mean by the turning point is when a price is moving in a one direction, suppose upward and upward, and at some point of time, it is going to either take a rest, it is going to come down, or even sometime it is going to change its direction altogether. So whatever will be the situation, these oscillators are going to tell us or indicate that okay, when that particular stock is going to turn its direction. Okay. And what that this explains that they are going to help us identifying the extreme emotion of the market crowd. When I say market crowd, so any point of time if you see any of the stocks, okay, let's say same example of okay, maybe the SBI chart that we were looking few minutes back. So any point of time there are thousands, not thousands, millions of people who are trading that particular stock. Okay. So if you select any stock of your choice at any point of time or any particular day, there are lakhs or maybe I can say more than lakh. I mean, when the SPI, let us say I have selected suppose the daily one. Okay, how many trades happened today? So if I select the last candle, okay, okay, I need to add the volume just to know. So if I just hover my mouse on this particular candle, if you look at the volume data next to the volume, just keep an eye here. Okay. So it said 21.292 million. These many trades of this particular stock happened today. That means for somebody, those many stock has been sold at the same time, those many stock has been purchased. Okay, so it is the so trades basically number of trades sold with equal to purchased any point of time. So what this oscillator is going to tell that extreme emotional situation or the extreme emotional state of the market. At the same time, it also going to tell that it is going to be overbought or oversold. So this is the just term use. There won't be in reality something is overbought or oversold. I mean, number of purchase equal to number of will always be equal to number of sold stock. But what is the mean by brought overbought and oversold is that if some point of time, a lot of trades are happening, and maybe market is going up and up and up. Okay, so there will be a certain situation, certain point that there won't be any individual who are or who is willing to pay any price higher than that. Okay, so that is the, I mean, uh, people are very aggressive in buying, and that is the reason market goes up. And when certain point of time the market is not going to go up, it is become a constant or it is maybe falling a little bit. That means that okay, overselling happened. Okay, maybe people are not going to purchase that particular stock anymore. And similarly, uh, sorry, that is the oversold means it is any stock price is going down and down and down, and after that, maybe there is no seller left who is going to sell their stocks what they are holding at any price point below that. So that will be your bottom situation. Okay, so that means the oversold. So that is the market terminology we use in the stock market: overbought and oversold. Okay, so they work as an extreme. For example, so normally what happens that this okay, what is mean by the oscillator means that this indicator has a fixed value. Fixed value is they are going to oscillate between some like 0 to 100. Okay, at any point of time, their value is are not going to go beyond 100 point, uh, maximum, and 0 point, in the lower side. As compared to the like stock price, it can go to the maybe few rupees to few hundred to few thousands, and sometimes maybe close to the lakhs also. Okay, but for these indicators, why they are called oscillators? Because their value will be in between, or value will be in the range of 0 to 100, and that is a call they are, that is the reason they are called as a oscillators. Okay, and these oscillators are again going to help you to identify or give you the signals that okay, when is the right time to purchase, and when is the right time to sell. And the names of these two oscillators are stochastic and relative strength index. What are they? So let us first understand about stochastic. Okay, so stochastic is the another indicator which we can add. Okay, let me first show you how to add, and then I will explain you. So this is my SBI chart. Okay, to add the stochastic indicator, I will click on the indicator option and just type STOC. It will give me stochastic and stochastic RSI. And we are going to select here is just stochastic, not stochastic RSI. Okay. So once I select stochastic indicator, so the bottom side of this page, this indicator will be added. So here, if you see, the red line is more of a smooth one, and the blue line is too much of zigzag. So what we are going to do that, if you look at the here stochastic indicator, that the entry, and next to that again there are the three icons, and these are the standard format of these icons. I will click on the middle one, which is format. It will open up this particular page. Okay, so length is color 14 by default. I'm not going to change anything. Where is the smooth cage one, I will just delete it and make it 3, and smooth D is okay. So that is the just a change I'm doing on that indicator to look smooth. Otherwise, there is no other region. Okay. So now it will be smooth. It will looking nice to your eyes and better to use. I mean, whenever you wanted to identify something out of this particular indicator. Okay. So this is how we need to add it in the chart. And how to read that one, I'm going to take the help of my slide. So this particular, stochastic, and it is very similar to MACD. It has again the two lines, basically the blue line and the red line. Usage will be again the same as MACD. So what it means that when the blue line is doing the crossing over the red line, that point will be considered as a potential buy signal, and is called as a positive crossover. Okay, and it gives the buy signal. At the same time, whenever this blue line is crossing down the red line, that is called as a negative crossover, and that will be treated as a potential sell signal. Okay, and just by looking at this particular stochastic indicator, you can able to identify that okay, where is the overbought region and where is the oversold region. So whenever these stochastic indicators are moving, so as of now we see that the within the stochastic indicator there is a pink area, and that pink area is by default it is depicting the 80. The upper line is 80 and the below line is 20, and overall 100. So maximum this stochastic can go up to 100, and minimum is can reach up to 0. Okay, not below that and not above that. So the upper dotted line of this stochastic pink area is called as a overbought region. So that means whenever your stock is moving, okay, the stochastic indicators are moving in this direction. So if it moves very long period of time and away from this 80 line, which is the upper dotted line. So whenever your stock indicators are moving in the upper region, so it is treated as an overbought region, and in general it indicates that okay, any point of time some correction might be happening, and then you can be ready for that. At the same time, when it is coming down below 20 level, and that is called as an oversold region. And again, if it is going to take spend a longer time here, and that means after that long time or short time, it is again going to go up or enter into the this pink region. Okay, and depending on this, looking at this particular crossover, one can able to decide when to take a potential entry or when to take an exit, or when to buy it and when to sell it. So in this example, this is the positive crossover, a potential buy signal, and this is the example of a negative crossover, that is the potential sell signal. So here I have a quick question for you. So look at this point, okay, where I'm highlighting uh, my mouse. Either look at this point or look at this particular candlestick pattern. Okay. So depending on these two, these two information, please tell me what will be your decision, buy or sell. If you can look at my screen, the question is about this particular price, that this particular indicator point or this particular price point. What you are going to do? Are you going to buy this particular stock, and this stock is ITC Limited? Are you going to buy it or sell it? Please, maybe you can unmute yourself or you can type it in the chat box. But you need to share your view. What will be your decision? Please unmute yourself and share your opinion. Anyone? Amar, Anup, Paudesh. Okay, so it looks like positive crossover, so buy here. Absolutely correct. This is the right answer, Induji. So, because there is a positive crossover, and it is a potential buy signal. So, buying will be the right option. Potential buying will be the right option. Great. The next,
How are we cross-checking it apart from that particular signal? I don't see anything in the candlestick pattern to say that, okay, buy.
sorry, because of some reason I'm not able to hear properly, Manisha ma'am.
See, we can understand that because of the positive crossover, it was a signal for purchase.
Right.
But just based on one, I will not decide. I'll also look at the candles. And in candles, I could not see anything which told me to buy.
Yes, correct. So again, this is just depending. This question was just based on this particular stochastic indicator, not the actual buy here. To take an actual trade, we are going to apply few more things, and which we are which we are going to learn. So, but considering this particular example, just based on the this positive crossover, it will be suppose if I have five different points to decide, okay, what I'm going to do based on the five or four, or maybe five different points, different parameters. So one this parameter is I'm just taking, yes, I will decide to take the trade, and along with this one I will have few more, and that few more we are going to learn. Maybe some of them we have already learned, some of them we are going to learn.
Okay. Will you also be telling us which one should we apply when?
Yes, yes.
Lots of them, right?
Yes, correct. So today,
in due
mostly
course.
you will, yes, ma'am.
Yeah, in due course, you will also explain that.
Yes, correct. So after once we finish this concept sessions, then we are going to maybe learn how to apply into the real market by applying more than one indicator together. Okay, and then we are going to take the decision. Hope I'm clear. Okay, thank you. So stochastic crossover is done. And after that, next one is called the relative strength index, that is RSI. So before explaining, I will just first show you how to use them. I'm removing here stochastic, and then I will go to the indicators and I will type here RSI. The first relative strength index is my indicator to select. And as I mentioned earlier, these are called as oscillators. So that means they are going to oscillate between 0 to 100. Maximum value could be 100 and the minimum value could be 0. But in practical scenario, maybe I have not seen it is going below 10 or very extreme situation 7. And the upper side, I have seen maximum 93 or 94. Okay, not above 94 or not below 7. In between, it is going to oscillate. Um, and and it has the single line. Okay, that is the good thing. So, and personally, I use this particular indicator very much. RSI is one of my favorite indicators. I mean, once you learn and apply, keep on, I mean, start applying. I mean, it can be your favorite too, or maybe something else. But for my, whatever the trade that I took, RSI used to be one of my favorite indicators. So basically, how to use them, I will explain you with the help of the slide which I prepared for this particular concept. So, sorry. Yeah. So how to apply them? So when RSI movement is happening again in same oscillator plus and minus, so it is okay, and it is not as smooth as MSAD or stochastic. It is more little bit a zigzag, but overall it is it's oscillating in between. I can say 10 to 90 or somewhere in between. So it has the just direction. For to read this RSI, we need to look at the direction. So for example, this particular stock is of Tata Motors, and where if you see that okay, the price was falling till this particular point, and at the same time, this RSI indicator has some direction. Okay, but if you look at the next candle, that is this green candle. Okay, so green candle is again one of the indicator for us to decide, okay, this is the bullish candle. Along with the green candle, RSI will give you the another advantage to have a better conviction. And that conviction comes in the form of what is the direction, okay, of this particular indicator at this candle. So this is the green candle. If you see here, this is the RSI direction has been changed from it was till this point, and before it was kind of a pointing downside, but from here it moved upside. So upside, that is called here the uptick movement. So it shows the uptick, and at the same time the bullish candle. So this is the treated as a potential buy signal. Okay, most of the time, if you look at my language, I keep on using the potential buy signal or potential sell signal. The strong buy or strong sell, when we have more than one indicators working at the same time, then we will say, okay, this is my, strong buy or strong sell. And at the top, if you look at here, okay, so corresponding price point, if you look at the RSI. So RSI is showing a down tick. Okay, so that will be treated as a down tick, and the sorry, here is a typo here. It should be a sell signal. Okay, so please let me change it here as. Okay, so this is the potential sell signal. And at the top also, if you can see, there is a bearish candle, and along with the bearish candle, RSI is also showing the down tick, and that can be treated as a potential sell signal. Okay, so this is a very simple use. Few more additional information I would like to share is, okay, which I have observed based on my couple of years of observation onto this into the stock market. So what happened that, okay, whenever this RSI value, okay, is going to maybe more than 70 or sometime 80 or so. So once the value reaches very high, I'll just take the and some other example just to have a diversified examples, I can say.
So, sorry, Sachin, before you go to the next chart, can I ask a
Yes,
question?
yes, Manisha ma'am. Maybe because of something I'm not able to hear you properly. I better I will put my headphones so that I can.
No, it's a problem at my end. I
Okay.
am taking a.
Okay.
I'm
No.
in train actually, and I'm trying to take it from there, but
Okay.
very weird. I'm all over the place, but I try my best to attend.
Okay.
So
I can appreciate your
no, the
dedication.
classes are good, so I don't want to miss. But even if I don't attend, I always listen to the video.
Great. Great.
Um, so um, uh, in the chart where you showed us the buy and the sell, where you made the correction, can we go to that point?
Yes. Yes.
Okay. So here, uh, if I look at the candlestick pattern, I, can I call that as head and shoulder? It's not exactly symmetrical, but
Yes. Yes. It is.
please go to the chart. Please go to the chart.
The example that I was showing.
Yeah, here in this, can we call the higher point as head, and there are two, they're not exactly symmetric shoulders, but they
Yes.
do
Correct.
have some kind of shoulder.
Yes. Yes. Absolutely.
And
This
because
is
after that the reduction is very drastic.
exactly. So I think yesterday somebody, maybe Avdesh or somebody was asking, how can I identify the top? How can I take an entry at the top? So this particular RSI, combination of the RSI plus the candlestick patterns are the one way to identify the potential tops and bottoms. Okay, so and again, as we learn further, there are few more. So this is one of the ways to identify the potential tops. Okay, by looking at the RSI. And the next information which I was going to add here is it is related to the same, the value of these RSI. So what happened if at this point of time, the upper dotted line is around 70. Okay. So in general, this is not always, but most likely, most probable scenario. Whenever the RSI value, okay, it's going uh, 70 or above. So any point above 70, whenever it keeps on moving, it is kind of, it will become unstable. So if I take the practical example, suppose maybe we are driving maybe a car or even sometime bike when I learned with a moped bike, right? So that maximum temperature, not temperature, maximum speed of that bike used to be, uh, I think 70 km per hour, 70, 75. So after reaching to the top speed is become unstable, it started vibrating. Okay, so this RSI indicators also consider like that. Whenever it is touching 70 and above, it will become unstable. Okay, so mostly there is a high probability that from that particular point where RSI is any point of 70, 75, 80, if that's reaching there, it will become unstable and it will come down. That there will be high chances that okay, market will correct or the price point will come down. Okay, so that is the in general, not, it will not happen always, but mostly if you, and that is the few example I can maybe show you here, different examples. So this is example of the Reliance. Okay, Reliance is one of the outperformer stock so far. If you look at the Reliance history, okay, so this has been an outperformer. like price started somewhere in 2005 around 100 rupees, and the current price it went up to 2800, and current is trading as somewhere around 2300. Right. So that is the monthly time frame. If I look into the weekly or daily, okay, so you can look at the RSI peaks, and maybe I'll draw again new line. So this is around 81. Okay, so wherever it is touching, it touches at 78 or 80. After that, the reversal happened. Okay, so here it is touching 80 again, then some came down. This point of time touches 80 and the complete reversal happened. I think this was the during the pre-COVID scenario, and again and so on and so forth. So whenever it is touching at the highest price point, it become unstable and the price came down. So that is the additional information I just shared based on the my experience about this RSI. Okay. Um, I think this is the last one concept of today, and we have reached. So I'm not sure if we can cover it tomorrow also. Okay, and this will be going to be a one of the very important one. So maybe I don't want it to complete in hurry. So let us learn about this concept maybe tomorrow. And if we have any questions related to the today's session, we are going to discuss. So maybe considering the couple of minutes, if you have any questions, any questions so far based on whatever we have discussed, feel free to ask any question related these three uh, concepts like MACD, um, and the stochastic and RSI.
Understand the RSI. I mean, what is it about? Like we know moving average, we know stochastic also. Where does it come from? What is it?
Sorry, your voice is not audible. Maybe you can. Okay. So looks like Manisha ma'am got disconnected because of the fluctuation in the train signal. Uh, any other question from anyone? If you wanted to discuss, feel free